Rahul Kaval, News Director, India Today and Untitled on stage to please moderate this conversation. Needs to win an election, he's already a star. We had this kind of a crowd yesterday for Arjun Kapoor and now we have it for Aditya Thackeray. Okay, can we request all of you to please settle down? So our next session, has the India growth story bottomed out or will the pain get more severe? Can I please invite Rahul Kaval, News Director, India Today and Untitled on stage, and Dr. Rajiv Kumar, Vice Chairman, Niti Aayog, please.
Can I request everyone to settle down, please? Faced with heavy criticism of its handling of the Indian economy, the Modi government has rolled out arguably the single biggest economic reform measure since it came into power. The deep cuts in corporate tax rates are an attempt to stimulate investment and revive growth. There's also been a backlash from those who feel that this decision has been taken very late and has been taken under extreme duress. To talk about the roadmap for reviving the Indian economy on the back of this big tax cut, I want to welcome to the India Today conclave the Vice Chairman of the government's premier economic think tank, one of the country's top economists, Dr. Rajiv Kumar. So welcome. The decision your government has taken yesterday changes the entire context of our conversation. But I want to start by asking you, of all the various measures that could potentially have been taken, why has the Modi government picked a deep cut in corporate tax rates as the one fiscal stimulus you believe is most opportune for the economic challenges we face at this moment?
Well, Rahul, I think the rationale is very simple. It was clear that the investor sentiments, the so-called animal spirits, were flagging, and this had been discussed before. You know that 97% of the firms had already been covered by the announcement that they will pay 25% up to a turnover of 400 crore, etc. So there was not a large number left, but these are the people who are the movers and the shakers and the larger guys, and they are the ones who clearly influence the sentiment, and therefore the idea was, that's one thought, that this is what you needed to get the investor sentiment, reverse the sort of dormant animal spirits. The second is that you have to sort of, and it's always been the government's policy to come in to align itself with the rates in the Southeast Asian economies, and you had to also, and if you notice the nice sweetener there, which is the 15% plus if you were going to invest until the 31st of March, is actually directly aimed at those who will be leaving this Pearl River Delta, the South China.
You're saying very nonchalantly that it's always been our aim to align with Southeast Asian economies. I wish that were the case, because if it were, you would have announced this in a very structured fashion in the union budget, rather than having to present 4 mini budgets on the side.
No, you see, one, that's water down the bridge, so let's not paddle there. let's sort of look forward. But the second thing is that from the first budget onwards, Finance Minister Jaitley had made this announcement, but it was going to take a sort of conjunction of factors to be able to get there. And the process had started. The process of reducing the tax rates and making it simple had started from that time onwards. Of course, it has taken it's taken what has come to being to trigger this. But as I said, as you would know, that this is one situation which is much better, but better late than never.
Most of the politicians we speak to seem to be in denial on the economic problems that this country faces. Very few accept that at least part of the problem that we're having to deal with is of the making of this government and some of the measures that you've implemented. As an economist, I hope your perspective on this is slightly different and you accept that yes, we're having to fix a problem, part of which is of our own creation.
I don't know about the latter part, because I think we inherited a very bad hand. We inherited a very bad hand. If you look at the figures, 2011 onwards.
So when you're saying we inherited a bad hand in 2019 or 2014?
14. I mean, of course 14. But
you inherited a tough hand in 2019 also.
Yeah, and it has taken a long time for us, to extricate the economy out of that, and especially in the credit side, because the credit growth of the banking sector has been on a steep decline. I mean, at the moment, actually as we speak, the exporting sector has a negative credit growth of 35%, and it had gone down to negative about 40-odd%, no, even more. So there are several things there. And then the other thing, which is that you cannot, of course, you have to prepare the economy for being, for not worsening the equity within the system, because that's the other fear. So I mean, a lot of time was spent therefore in the first 5 years to making sure that once you get the growth, once you step on the accelerator, then the people who are at the bottom of the queue, at the bottom of the pyramid, or the last of the queue, would get those benefits and not just get the trickle-down effect.
The tax cuts that have been announced will lead to revenue foregone to the extent of 1.45 lakh crores. That's serious money, about 0.7 of the GDP, taking the fiscal deficit up to 4%. Where is this money going to come from? What's the government's plan? How will this tax cut be financed?
I hope you're not surprised to know that we've done lots of detailed sums on it, and the fact is that this will and can come from two sources. One, of course, is the buoyancy of the growth itself, which means that the growth factor, because in the past our tax buoyancy has been very good, and therefore both your indirect and direct tax revenues collected will go up with the growth, and also the Laffer curve will work, which is basically that once you lower the growth rate, tax rate, you get more. That's the first source, and which can be quite robust. The second one, of course, is non-tax revenues, and we have in Niti Aayog and otherwise in the North Block done the sums that this investment can yield to you an extra. The target is 1 lakh crores. This budget itself.
In this year itself.
That's the budget target. That's the budget target. And that there are 24 public sector companies which the cabinet has approved to be disinvested. Now, if you only take those into consideration and you actually are able to disinvest, complete that disinvestment taken 2 years ago almost. And that's the process that you need to now focus on, and there's a strong focus on that. You can collect up to net 1.3 lakh crores. Net meaning gross, not just gross revenues, gross receipts, but minus the liabilities that that'll have to go.
But how soon will some of these companies be disinvested? Because we've been hearing about this for months on end. You haven't done it yet. For example, Air India.
You see, Air India is not one of the 24.
Sure.
So let's not talk about that. It's a separate case altogether. These are 24, and I don't remember all the names, and neither do I need to reveal them. But the thing is that this is where, I'm sure you will see a huge amount of focus in the coming days by the government, in the Ministry of Finance, in DIPAM, to get this over. Niti is inherently involved in that. We are the ones who are sort of recommending, pushing, etc. But that's one part of it, and that will yield you an additional over the budget of 52,000 crore. You got another 50 odd crore from the RBI additional this year, which was not included in the budget. So that's a lot. And then you have the whole source of asset monetization. And I have got the list here, which is that, you have power transmission lines, you have railway stations, 50 big ones, you have golf courses, you have stadiums, you have roads, 10,000 kilometers of that. If you tot them all up, it's a very large figure, but if you could do even 20-30% of those, and there is no reason to believe that you won't be able to do so, I think you're well home and dry. And so this whole fiscal deficit issue, I don't think, we will leave a gaping hole there, because the Prime Minister is committed to this. And that is why we've done the sums.
You think there'll be no hole at all, or there'll be some hole?
There'll be some, but which will be very marginal. And as far as I'm concerned, I have gone public many, many times that I'm not a fiscal hawk. And everybody, even including the rating agency, will accept something of a minor slippage if the growth picks up and the momentum carries on.
Okay, so you're speaking of growth. I want to show data on the back of the screen on where we are at when it comes to growth at this moment. And I want to understand from you, Dr. Kumar, where you believe this year will end when it comes to India's growth numbers. We're at 5%, which is deeply embarrassing. We are closer to the Hindu rate of growth than the double-digit rate of growth that you projected or promised when you won power, or your party won, or the BJP won power. Where do you think growth will go in the next quarter? And there it is. It just makes for very, very embarrassing reading. Just keeps slipping down and down. So are we going to go down further?
This graph is, by the way, etched in one's mind. So I mean, only to...
It's scarred in one's soul as well.
Well, yes, of course, if you like, yeah. But I think we've bottomed out with this. We had, a day before, we had what we call the economist huddle, where we had about 35 good economists coming there. And general consensus was that we have now bottomed out in the second quarter, which looked very bad at one stage, but now the IIP numbers, etc., are out. I think it will be higher than the first quarter. And then the second half will be far more robust. So what I think we will get, I think we will clearly beat the OECD latest revision, which is below 6. We will achieve more than 6, and about, I think, closer to 6.5. So that the second quarter will be surely above 7, nearer 7.5 as the whole.
The second quarter?
The second half.
Second half.
The second half.
No, because you're saying that the second quarter will be possibly lower than 5%.
No, it will be higher.
It will
be higher. We have, I think the first quarter marks the bottoming out of the cycle, and we will begin to pick up from here. And that was the sort of pretty much the majority view in this economist huddle, that we will have a higher print in the second quarter.
And what's your view?
I think so. I agree. I think
because I want to show you how we're no longer the fastest growing economy. One of your biggest pitches politically has been India is the fastest growing economy under us.
Just for 1 year. Before that, we were fastest. Just this quarter have we slipped below the Chinese rate. But otherwise, we have been above them quite comfortably. And we will go back again because the Chinese growth is stuttering. We know all of that, stuttering, and it will become lower. But we are the only $1 trillion economy which will achieve 8% plus growth in the coming years. And that's, I think there are so many, we talk about the potential rate of growth of potential output. There are so many sectors and areas, where there is growth bottled up. Agriculture to begin with. There's just no reason to believe that agriculture will continue to provide only 14-15% of our GDP with 43% of our labor, blocked in there. If we modernize agriculture today, which is what the government has set out to do, it has set up a chief ministers committee headed by Mr. Fadnavis to take all the structural reform measures that are needed to be taken. It's agriculture, our exports, our energy efficiency, our credit, and the credit growth. Rahul, you would know that in the private debt to GDP ratio in India, private debt, which is private corporates and household to GDP debt, is only 54%. It's almost about 160 odd percent in China. US can afford very much because there's the reserve currency, so there's more than 200%. But for us, the credit to GDP growth being at 54 offers a huge runway for us. And that's where we need and we expect, and the finance minister is taking steps to make sure that your credit growth in the economy, and credit growth which is, if you like, risk assessed credit growth, takes off and improves, and this will happen.
One of the reasons why credit growth hasn't taken off is also because sentiment is down. While of course yesterday's move is being hailed, do you believe that is adequate to address the issue of sentiment and trust? What more, because the Niti Aayog is constantly pushing the government to take more decisions, more reform, what more are you pushing for?
This is, in my view, it's the start. And and there is, and already, by the way, now all the steps that have been announced before in the 3 packages, and a large number of reforms and initiatives that are that are in the pipeline will begin to have a much greater impact in this background, because otherwise there was this overhang of pessimism. And so each one will be seen in a better light as we go forward. And just for starters, there is this doing business, ease of doing business. Now we are going to have a survey based on investor perception, and then
can I just show you what's at the back of the screen? So you're seeing in 2016 we're growing fast, and then we are comparing here with Vietnam, India, China, Egypt, Indonesia, the United States. Then we get overtaken first by Vietnam. The Chinese were behind us. Then the Chinese also overtake us. Egypt goes ahead of us. Indonesia goes ahead of us. So we're really slipping. So this whole narrative, election narrative, that under us we're the fastest growing economy of the world, is actually not correct.
Rahul, great graphics, but doesn't hide the fact that India was and will be the fastest growing economy, large economy in the world for years to come. Because we have the potential, we have the all the structural factors in place, and I don't think it takes a lot, for us to release this growth. The growth.
I want to contest that by putting to you what Dr. Atin Roy, who's a member of the Prime Minister's Economic Advisory Council, has written in a now widely cited article where he says India is headed, he fears, towards a middle income trap. Like a Brazil, like a South Africa, there's a very real fear, he believes, that we will get stuck in a middle income warp and not be able to, like a South Korea or a China, raise the level of income of the bottom of the pyramid.
That takes the debate completely to a different level. At the moment, our per capita income is below $2,000, right? No, it's it's about $1,900 odd. If we double it in the next 5 years, it will be we'll be closer to about 5,000, about 4,000 odd. Now that still leaves us sort of just short of the low middle income. So the middle income trap starts at above $8,000, $10,000. I mean, there is a huge potential here already. So those who are talking about a middle income trap and talking about the fact that we will not be an advanced economy, will not do a Korea at 22,000, above $22,000, etc., fail to recognize that even China, with its 3 decades of 9% growth, is today at about $5,000+ economy. Now that will, if we achieve that, we will be the second largest in nominal terms, and probably the second largest and the third largest in nominal terms, and the second largest in PPP terms by a long shot. And that India is already going to be a completely different ball game, completely different scenario. So I mean, talking about the middle income trap is really, honestly, completely out of place at the moment. Because we are wanting to remove. We have, for example, between 2005 and 16, moved 270 million people out of poverty. We have another 200 million to go take that way. So talk about middle income traps at the moment. That's the first part. And the second part is that given our structural factors, given our our working age to total age population ratios, given our savings propensity, given our investment in the past, which has reached 39%. See, we are not an economy which is like the Latin Americans, only a sort of very low investment to GDP ratio economies. No, our entrepreneurial class, our middle class is a savings class, is an investing class, and they have demonstrated that in the past. So there is no danger at all. And I took on Ratin in the same Mind Summit, where and I don't think he's able to counter the argument that India's structural factors, India's structural strengths are such that once we get going, there is probably but again, I mean, I'm not going to talk about above the middle income, because that itself is a big challenge. To get our per capita income above 5,000 is a huge achievement and a challenge. But we will get there because that's what it takes to get to a $5 trillion.
One of the problems why the economy's engines are slowing down is because consumption has crashed. Now, while you've given a cut to corporates, I want to ask you what is being done and why is not enough being done to stimulate consumption demand. We're heading into a Diwali season. Hopefully that will stimulate some demand. I want to show you RBI data on consumer confidence, which is crashing and doing really abysmally. Look at that. So that the 100 is defined on the back of your screen, ladies and gentlemen, as the line of optimism. So if you, the higher you are above 100, the more optimistic people feel about the economy. The lower you go, which means that you're now in negative zone. So you're seeing on that screen as you head towards election cycle, there's a big jump. You know, just ahead of elections, there's a big jump where consumer confidence goes up, and then after the elections, it's crashed. It's again in negative territory.
This was surely taken a day before. You know,
Of course.
and I think you should.
He's
take
so
it-
happy that yesterday whatever was announced is announced. It makes his
No,
life
but
so
the
much
point
easier.
is, I don't know what the date for this is. And
No, this
I
is
mean,
from the
I'm-
RBI report.
No, no. When was this? I don't know the date for this. And, you know,
The consumer confidence survey put out by the RBI.
No, I'm
but of
merely
course,
saying-
it's not taken yesterday.
No, no, not yesterday, but also I think prior to the announcements, post-budget announcements. This is probably June.
July.
June.
July 2019.
July. Yeah. Okay. So the consumer confidence rises with the growth prospects and rises with investment prospects. So the consumer confidence doesn't necessarily rise with handing out, you know, and doling out money to sections of consumers. No. Consumer confidence is about what do you think. I mean, in economics, we say that consumption is a function of permanent income. And permanent income means is what do you expect to earn in the future. So if you are a young person entering the job market, etc., and you think your prospects are better, then you go out and buy the consumer durable that you want to. So consumer confidence is a direct function of growth prospects and growth expectations, combined with inflationary expectations. Now that have changed. That's the whole, the entire burden of the argument is, yes, we agree that they had taken a knock, but that was because of the uncertainties induced by the election process itself, the formation of the government, all of those things came together, etc. Because that's what also affects investment sentiments. After July, the budget, and now until now, I think all of this will change dramatically, and you will see the next edition when it comes out will be well above 100.
In your view, why are consumers not spending? In your view, also companies, they're sitting on cash rather than investing. Why is that the case?
You see, because I mean, if you look at the data, household savings have gone down, and household savings have gone down quite substantially actually, simply because there are people who are now perhaps fending for the future, or spending where because there may not have been growth prospects, employment prospects, etc. The consumers are not spending probably because they see their employment prospects, their growth prospects, their the sort of improvement prospects not as bright, and that will change, as I said, now.
But
and you will
what does it say about the confidence of people in the ability of the Modi government that the confidence is down? It will be argued, Dr. Kumar, that this government so far had not shown economic audacity. Like they'd shown political audacity, they'd shown diplomatic audacity, inviting Trump to the Houston event. That's diplomatic audacity. Come, I'll help you see what I've got for you. Doing Article 370, that's political audacity. Doing the surgical strikes, that's military audacity. Why is this government so lacking in economic audacity?
The economy, Rahul, for whatever we say, is such a complex situation that to be audacious, you need to have done your sums right. And to get the right, you need to have done your sums right. You need to have done your analysis right. So, because the economy is not a single variable phenomena, like perhaps diplomacy is not. So, you see the word audacity is, because you don't want to be, how do I say, you don't want to be audacious, and, the best way to put it is that you want to do things where the expected value of returns is good, highly positive. And
then you do silly things. One second. Like put surcharges on foreign portfolio investments, which knocks off $200 billion of market capitalization for an incremental revenue accretion of only 400 crores. So how does that get justified? What's the economic
Clearly
increase in the
wasn't
growth?
justified, therefore rolled back.
So who made that mistake? One second. If something goes wrong, if you lose Maharashtra, heads will roll. When a decision as silly as this gets taken and has to be rolled back because markets vote with their feet and their money, who gets held accountable? Who takes these decisions, Dr. Kumar?
All of us together. It's a government decision, right? So therefore, and therefore, you can't possibly point fingers, but this is a decision where clearly the sums went wrong, and therefore the decision was rolled back in very short time.
So you ask,
and it is not usual for governments to accept and take, ameliorative action as quickly as this government has done. But again, I think you're taking the debate into a backward-looking situation, where the debate should really be as to what's going on in the future.
If you ask traders in Mumbai and Gujarat, they will say, boss, this government is not understanding dhanda. That's the problem. Like they've got Ajit Doval for national security, he understands how police stations operate. Like you've got Amit Shah for politics and for elections, he understands how every ward, every constituency operates. They simply don't have somebody who can help with the nuts and bolts at the ground level of how trade in India operates. How do you respond to that criticism?
I completely disagree, because this government and especially the Prime Minister has so many feedback loops, to come to it, and constantly being sensitive and focused on the ground realities, because of all sorts of reasons, that to say this is missing the point. Because if it was so,
you can have lots of feedback, but which feedback are you listening to?
No, but you see, the fact is that you first must ensure that you have the right feedback, which this government does. It has therefore also the sensitivity to act upon it, because otherwise you wouldn't get the changes that you've got in the last 2 months, right away. And now you've got, and as and when you noticed that, look, this is probably you needed more than that. You've got what you got yesterday. So to charge the government even for a minute to say that, look, this government is not savvy enough in the economic terms, I think is missing the point.
Why could some of this not have been done earlier? You've been promising it for a long time. Would you accept the contention that in India, it takes a crisis to create reform? If there's to be reform in the economic sector, there has to be a deep crisis. When there is no crisis, we don't have the courage to do it.
First point is that 5% rate of growth is not yet a crisis. I don't know. You really change the definition of crisis. I don't know.
Looming crisis?
Huh?
Looming crisis? Staring at a crisis? Heading towards a crisis?
You are able to foresee a coming thing and take preemptive action, and which is, I think, good enough. Now, and the point is simply is that you always do want to be in the government, and especially the Ministry of Finance, not fiscally irresponsible, and therefore you want to take actions, in a calibrated manner, and wait for the response. And if the response is good enough, you do that, right? So that's what's happened here. You have waited for you've taken calibrated measures. This government is also not in the business of making unnecessary headlines. The government is in the business of, taking the steps required to, as I said, in a calibrated manner to get there. But again, Rahul, I think most of us forget as to the large number of structural measures being taken to improve governance and efficiency and the delivery of public services and so on. Now that's itself, that impact will now begin to be seen much better in this background, when the investor sentiment turns up.
So the Niti Aayog has been at loggerheads with the auto sector. I want to show you data that we've got
This is totally false.
What is false?
That Niti Aayog has been at loggerheads with the auto sector.
So it's not what you think, it's what the auto sector thinks. They think they're at loggerheads with you. But that's besides the point. Let me just show you the data and then try and understand from you. So this is Hyundai, Mahindra, Tata, Maruti Suzuki, Honda, and how their sales are going. You're not even looking back because he knows the data is not looking very good. He says, this is fancy graphics, but I don't like them. Okay, so it shows how, this month in August was 31% down. I want to understand from you why, according to you, Dr. Kumar, let's play that again, please. Why, according to you, is India's auto sector contracting so badly?
A whole host of reasons, but it would have been really nice if you had shown us the graphics also on the auto sector profits, in the same time for the same companies. And you would have seen that, it represents a fairly healthy picture. So with those profits, and with that bottom line, I think it's the auto sector should answer as to why their top line is not doing as well as the bottom line, and what measures have they taken to improve the top line, right? So, and the fact is that the entire world, I mean, it became a huge, controversy when Niti Aayog, made the announcement. But by the way, that's the one clarification. Niti Aayog never made the announcement on the two-wheelers and the three-wheelers. In any case, we never talked about the four-wheelers in any case.
Okay. Since you're blaming,
hang on. I'm not blaming anybody.
No, you're saying that auto companies are sitting on cash, they're making profit.
I'm simply saying that every industry, especially one which is, which has had such a good run for such a long time, should be able to take measures to, get their act together and get the sales up. And I don't know. I mean, I'm not an auto sector expert. I can see Mr. Bhargav sitting here. He'll probably be able to tell us.
Okay. So since you're putting the onus on the auto sector, I want to go across to R.C. Bhargav, legendary chairman of Maruti Suzuki, one of our most venerable auto companies. You're being accused, Mr. Bhargav, by the vice chairman. Not you specifically.
Don't put the word in my mouth. No, this is not right. You cannot improve your TRPs by putting moves in the mouth.
I'm just recapping what you said, and everybody's sitting here
you're not right
watching
recapping.
on TV.
Sorry, you're not recapping.
Okay, allow me to ask a question, then you can correct the framing of the question. He's saying that automobile companies should really be slashing prices. They're making too much profit. And for example, some of the royalty payments, which he didn't mention, but that's where you should be cutting down. If you slash prices, demand will see a spike. Part of the responsibility and the onus is on companies such as yours.
There is something called the price elasticity of demand.
Sure.
And in economics, we know that altogether. I don't know how much of that are we utilizing.
Let Mr. Bhargav respond to that. Do you want to respond to that? Because this is something that government is throwing back at the auto sector, saying slash prices. You're making too much profit. You need to cut prices. Demand will spike. Don't come trying to us. Don't run to us. Take your part of the responsibility.
Rahul, at this stage, a debate on whether anybody is making too much profit or not requires you to look at the balance sheet of all the car companies in India. And most of the car companies are making losses. GM folded up, Ford folded up, because they were all losing money. Most of the foreign companies who invested in India are all losing money. Tata Motors is losing money. Mahindra's is hardly in the business of cars. They're doing SUVs. Who's making money? We have accumulated money largely because we have from the beginning been a very frugal company. We have paid low salaries to our top management. We have not spent money on various kinds of things which are spent. We have never siphoned out money out of the company. We have no cash transactions. We have built up our reserves.
We are coming
More
to
companies should do that.
Statements that are quite extraordinary. Siphoning out money, Mr. Bhargav. I mean, but would you tell us also as to what is your export revenues? Or also tell us as to what sort of, royalty payments have you made? You see, and the fact that there are companies like Hyundai who are actually doing reasonably well because of the exports that they've done. Mr. Bhargav, with all due respect, and I know that you're a far senior to me in all of these things, it is a state of the industrial sector depends on a large number of things and not just on government policy. So let's agree to do things together to get the industry back on rails and to say as to how we can improve. I mean, the component exports have done so amazingly well, and 9 billion or more. So the OEMs, have they followed suit? So I am honestly asking the question, that the way it was made out in the beginning of August when a committee of secretaries proposed to the Ministry of Transport that two-wheelers and three-wheelers shift to electric drive in 23 and 25. At that time it was made out as if this particular proposal, not even a policy, was responsible for all the ills of the auto sector. I think that's been very unfair.
You have raised a number of questions, sir. As far as exports are concerned, we are exporting about 120,000 cars a year. The foreign exchange earnings from exports have always exceeded what we pay out in royalties. With the technology which we get, we have been exporting even to Japan. There's hardly any manufactured product out of India which goes to Japan. What has happened this year is that we have decided that all the standards of automobiles here will be at the level of the European standards. They cost the same. The ability of the Indians to pay is far lower than the ability of people outside. You're talking of price elasticity. Nobody has looked at price elasticity before they keep increasing the actual cost of production by changing regulations. I think somebody should look at price elasticity, and if we are going to grow at 15%. Incidentally, for the auto growth, I'll just give, in the last decade, the growth CAG of auto industry has just been 5%. It's not grown rapidly ever.
Well, I suppose there are other sectors to discuss.
No, but this comment made a lot of headlines, where Finance Minister Nirmala Sitharaman in part blamed millennials and the fact that they are preferring shared mobility, Ola, Uber. As Vice Chairperson of Niti Aayog, do you blame millennials for the auto slowdown?
I have two sons who are millennials. I can't.
Do they have cars or not?
I can't blame them.
Do they have cars or not?
One of them hasn't learned even how to drive.
Why?
I don't know. Ask him.
So he's managing on Uber and Ola.
No, he doesn't live here.
Okay. So, but okay. Finally, as we conclude, GDP numbers have been revised downwards. After what happened yesterday, where do you think India will end when it comes to growth in this fiscal?
India will achieve nearly a 6.5% rate of growth this year, and we will be on track for doubling our per capita incomes in the next 5 years.
We're going to leave it over there. Dr. Rajiv Kumar, for coming to the India Today conclave. This is the first time in a long while that you've spoken in public, so we deeply appreciate you having made the effort to join us. And your life, of course, was made much easier by Nirmala Sitharaman. You know, he sent one bouquet on the side to her that in terms of timing, just before I reached the conclave, you made this happen. Look at the smile, made his life so much easier. Thank you very much for joining us here. Let's just hope that some of what you've said, the positivity that you've exuded, goes down to the street as well. Thank you.
Many thanks, Dr. Kumar. We just request you to stay back on stage. Thank you very much for that very fascinating conversation. Can we invite TC Susil Kumar, Managing Director of LIC. Mr. Kumar, can we have you on stage, please, to please felicitate Dr. Kumar. From the economic crisis, let's move on to the water crisis. Niti Aayog, just a little while ago, a few months ago actually, had put out a scathing report in which it had said and warned that 21 cities will run out of groundwater by next year. At that, 70% of our water bodies are contaminated. We also have Prime Minister Modi, who has promised piped water for all by 2024. For the very first time, water is at the center of a political conversation. It's at the center of a political debate. Our next speaker, Mr. P. Sainath, founder editor of People's Archive of Rural India, will be talking to us about India's mega water crisis and our role in triggering it. Can I also please invite Shoma Chaudhary, consulting editor of India Today, to please come on stage and take this conversation forward. Over to you, Shoma.
This won't be a conversation because what it really is a warning bell. What we're going to hear in another couple of minutes will soon make all other conversations seem irrelevant. India has 18% of the world's population and only 4% of its water resources. 820 million